President Trump also today saying and reminding us that this is the greatest economy ever.
We have the greatest economy ever in the history of our country. So we're very happy with the way things are running, generally speaking. I don't think we've ever had an economy like this.
You know, maybe he's right. Deloitte is now saying that holiday spending is coming to $1.1 trillion. The question is, could this actually be the greatest holiday season ever? Here now to discuss, Fox News contributor Liz Peek, John Burnett, New York GOP strategic advisor, and Erin Gibbs, S&P investment advisory service portfolio manager. Liz, I got to tell you, the numbers, just the job hires alone, I know that Challenger Gray says it's 400,000 and counting, 120,000, I think, Target at $12 an hour, 100,000 UPS, FedEx. I mean, the numbers are mounting up.
They really are, and they're big increases over last year. That's the point. Target, for example, is up 20% over last year. So that gives you some indication of what they think their sales are going to look like. And remember, this is in an industry with supposedly declining retail sales at brick and mortar. So it's an amazing confidence builder. I think we're going to see that, by the way, also translate into spending on inventory. That was a drag on the last quarter. I think on this quarter it's going to be a plus. My guess is it's a plus going into the fourth quarter. These are going to be big numbers. You're talking about a $1.1 trillion. Last year, holiday sales were up 5.5%, $700 billion. So I'm not quite sure what the apples and oranges here is, but that's a huge number.
It's mind-boggling. You know, John, Kohl's started hiring for the holidays in July. Okay,
wow.
So yeah, so we are there. This locomotive is going.
Absolutely, it's really competitive out there. I went shopping yesterday. I'm already seeing some
my
Christmas
size, right?
already seeing
Cash.
Christmas decorations.
That's my size.
Yeah. But the thing is that it also this job report really is a testament to the high consumer confidence. When consumers are confident regarding their job, regarding their cash flow, and so forth, they like to spend and also hopefully save some. So we're going to see a lot of things coming out of this holiday season, especially with the high spending and everything else. And you know what? This economy is doing so good that even President Obama is trying to take credit for it. That's how you know how good it is. Why? Because we haven't seen an economy like this in years.
You know, Erin, of course, you've got to make investment decisions based on all of this. And to me, if the market is a harbinger of things to come, if it sort of looks out for the next 6 months, it's telling us that this is for real, that this head of steam that we've got is going to continue.
Potentially, I'm a little concerned about what we're going to happen once we sort of, get over the New Year's hangover in 2019. But for the Santa Claus rally that we have been used to, and for the past 10 years, the market tends to go up about over 2% just in December. So there really is an effect.
But that said, though, some of the historically weak months, right, like September, I think, go away in May, that stuff didn't work, right? So, I mean, we've got more momentum than we generally would have going into the end of the year. Right. And it can't just be seasonal. I mean, there's something unique, I think, about this economy.
I mean, first of all, we've never seen 20% profit growth and like high single-digit revenue growth. So this is just phenomenal. I think the only thing that's going to really struggle with retailers for this holiday season is logistics. We know that, one, it's just more costly to hire these temporary workers. Right. There are less people that are looking for jobs, so it might cost you more on wages. And another thing is just the cost of getting things from point A to point B, because like we know, we do tend to do a lot more Christmas shopping online, and it's going to, though UPS may make a ton of money, it's going to cost the retailers if those costs go up. So that's something to be concerned about.
And they are trying to address that with this omni-channel approach, right? It's, use your existing brick and mortar branches, make those mini distribution centers, and a lot of these jobs that they're hiring are fulfillment. And I think a lot of them will end up becoming full-time fulfillment jobs.
Yeah, and I think that's actually, finally, the retailers have kind of gotten the idea that they have to try some new things. They have to be innovative. They have to attract people into the stores to further their online sales. So that's kind of a major shift. Right. But I would say the other good news that's propelling this market, we've had two major economists on Wall Street come out and say, no sign of a recession, not just this year, not next year, maybe for 3 to 5 years. I mean, they may be wrong for sure, but these are really credible people looking at a whole host of indicators and saying this is going to go on for a while.
Erin, is that possible that we can go another 2 years without a recession?
I would say so. Just from the market's perspective and corporate profits, when you're looking at revenue growth of 5 to 8% for the next 2 years, you just don't have a recession when sales are going up that much. And they're just, everything really is somewhat of a Goldilocks economy. So the only thing we really have to worry about is if we just get too hot.
Right.
And we just don't see those
and
signs
so far,
yet.
these inflationary numbers have been tame or benign, if you will, and we also are beginning the right signals from the Federal Reserve that maybe they won't derail this whole thing.
Well, even amid all the tariff talk and things like that, where it'll actually have a slight uptick with respect to inflation, the market is shrugging it off, as well as consumer confidence. And when companies do well, as we've seen last year with the tax break and everything else, guess what? They share the profits. Main Street will actually get bonuses.
That's been a pet peeve of mine, right? Because I'm telling you, I've been talking about this a lot. I think that companies are going to have to find a way to share even more profits. And the reason I say that is I do believe that the socialism wave is so powerful, that this anti-capitalism wave is so powerful that these companies have to get in front of it because, the irony is the greater the market goes up, the more money that's generated, particularly for the Jeff Bezos of the world, the more those who are at the back of the line are going to be upset that they're not making as much.
Well, we want higher wages, we want sharing of profits, and we want all those things that put money not only in Wall Street, but also Main Street's pockets.
But guess what? A year from now, we're not going to be talking about this. You know why? Because companies are having to pay up. That's what's happening right now in all these hirings of retail workers. They're not, in fact, the bonuses and the wage increases. One of these companies is paying $12 that used to pay $10.
Yeah.
That's a pretty big shift, right?
20%.
So that the market forces are at work here, and they're going to solve this issue of stagnant wages. There already are, but I think it's going to accelerate.
But the key point in what you just said, market forces, not regulatory
That's what I'm saying.
intervention.
That's right.
Right. And by the way, I think Target solved another problem. I don't know about you guys, but every time I used to go in for that left wheel always got, oh my God. I mean, it's just making all this noise. I'm driving. What the heck is going on? I told the CEO, my man, you got to fix that rear left wheel, okay? I don't care what. Every card I got at Target, that rear left wheel, and the floor is making all this noise, and I'm feeling like red rum. Like, what movie was that with the kid was on the big wheel? He was like, red rum. Yeah, it's The Shining, right? So,
I'm glad they're making you happy.
Every time I went to Target, I felt like I was the kid in The Shining. Like, by the time I got to the CDs, I was crazy. Anyway, they don't have CDs anymore, and I think they fixed the wheels.
Hopefully.
So where do we go from here?
Well, if all the money doesn't go towards the new iPhone, so if people have money left over, but I still see the economy going up. Certainly, retail does look very good for December, and most likely beating estimates.
Doesn't it amaze you how much money is going into luxury? I mean, there's certainly people are buying luxury things who aren't in the luxury income bracket. I mean, we talk about aspirational. It's really amazing how much money people are going to spend on iPhones and Gucci belt buckles and things like that.
And entertainment experiences, that's another thing that is surprising is paying $300 for a certain event at ticket prices. It really is a unique economy right now.
I would argue the next big thing, home building. I think we're going to see millennial household formations are turning up right now. That's really been a laggard sector.
They've got to get
I will bet
lower end homes though, right? There's nothing under $300,000. I think that's going to be the problem there.
It's an affordability issue, and mortgage rates are up. I know all that, but the answer is when you have a young family, they need a home.
When we cut this deal with Canada, this trade deal, I think that's a place to look because the lumber prices have gone up so much. They come down a little bit more. That might be the buy signal. Dart Homes, by the way, reports before the open tomorrow. Guys, fantastic conversation.